All right, Talk Tickers listeners, you ready? Today we're diving deep into Hasbro's Q3 2024 earnings call.
Hasbro, huh?
Yeah, you interested?
Oh, yeah, definitely. I'm fascinated by how they're, adapting in a toy industry that's kind of been, struggling.
Yeah, it's not been easy for toy companies, that's for sure.
No, not at all.
But Hasbro's making some moves, some bold moves, and that's what we're going to break down today.
Strategic shifts, right?
Exactly, strategic shift.
We're not just sitting back.
Nope.
Gotta adapt.
So, what's got me hooked? Well, how about Monopoly Go?
Monopoly Go.
Yeah. Raking in, get this, $10 million every single month.
Per month.
Per month, just in licensing.
Wow.
Is that sustainable, though?
Good question. Good question.
We'll get into it, don't worry.
Okay, all right.
Plus, they launched the fastest-selling D&D product ever.
Really?
Oh, yeah. And we'll break down how their entire toy segment is showing some real signs of a turnaround, a comeback.
Interesting. So it's not all doom and gloom.
Not at all. Not at all.
They're streamlining. They're laser focused on that profitability.
Exactly. This isn't just weathering the storm. This is like
a transformation.
a transformation. Exactly.
I like that.
All right. So let's set the stage with Hasbro's overall financial performance for Q3.
Okay. Let's hear it.
Revenue is down 15%.
15.
Yeah. BUT, if we take out the E1 divestiture, it's closer to a 9% dip.
Okay. So not great.
Not great, but
not a disaster either.
Exactly. Not a disaster.
All right.
What's really interesting, though, is their adjusted operating profit actually jumped up.
Jumped up, even with the revenue dip.
Significantly, yeah.
That's fascinating. That tells me they're making the right moves, right? Increasing that profitability.
Absolutely. And it ties directly into their new focus. Games, digital, and IP licensing.
Smart. They're focusing on what works.
Exactly. And speaking of what works, let's talk about Wizards of the Coast.
Gotta love Wizards of the Coast.
Always a powerhouse, right?
Mm-hmm.
And Magic. The Gathering, no surprise, is still on top.
Of course, of course.
It actually did better than last year's Lord of the Rings set.
Wow, that's impressive.
Which says a lot about original IP, right? Even in a market that's full of, crossovers and tie-ins.
Yeah, you gotta have that strong original content. And hey, let's not forget about that D&D Beyond acquisition.
Oh, that was a smart move.
Genius. Their direct-to-consumer revenue in just that segment went from 0 to 60%.
That's huge. That's in a single year.
Incredible.
So if you're into D&D, you're probably already using their platform.
Makes sense.
And they're not slowing down either. There's some big releases coming up for both Magic and D&D.
Oh, like what?
Well, for Magic, they've got those Marvel Secret Lair drops coming.
Oh, huh?
Yep, Spider-Man and all those iconic heroes.
Nice.
And D&D, the updated Player's Handbook.
5th edition.
5th edition, yep. Already the fastest-selling product in their 50-year history.
50 years. Wow, what a legacy.
And a new Dungeon Master's Guide is coming, too.
I've heard good things about that one.
Oh, yeah, the artwork is supposed to be amazing. And it's got, a streamlined approach to running campaigns.
That's good.
Yeah, it's safe to say Wizards of the Coast is, they're on fire.
They're killing it.
Yeah, a real bright spot for Hasbro.
Absolutely. A key driver of their success, for sure.
Now, let's switch gears a bit. Talk about consumer products.
Consumer products.
Overall revenue, there is down.
Down.
But here's where it gets interesting. They're intentionally selling fewer closeouts.
Fewer closeouts. What does that mean exactly?
It means they're choosing to sell less of their overstock products.
Even if it means a revenue hit.
Even if it means a short-term revenue hit, yeah.
Interesting.
It's a sign, they're shifting from volume to value.
Instead of just pushing out as much product as possible.
Exactly. They're prioritizing profitability, showing confidence in their new strategy.
It's about quality over quantity.
Exactly. Making each product count,
I like that approach.
Yeah, it makes sense.
So what are some of the standouts in consumer products?
Well, Beyblade X, their new generation of battling tops, is gaining traction.
Beyblade, still going strong.
Oh, yeah. This new generation is intense.
I bet.
And Marvel is also seeing growth.
No surprise there, I mean.
Yeah. Deadpool, Wolverine, Spider-Man, always popular.
Always.
And, you ready for this? Play-Doh just had its best back-to-school season ever.
Play-Doh? Really?
Right.
The classics never die.
Sometimes the classics are the best.
Simplicity, versatility, it's a winning formula.
It really is. All right, now for a bit of controversy, let's talk about Monopoly Go again.
Ah, yes, Monopoly Go. 10 million a month, but downloads are down.
Right, downloads are down. But UT Hasbro is projecting continued strong revenue from it.
So what's the story there?
Well, downloads are only part of the picture, right? The key is user engagement.
And how engaged are the users?
Well, Scopely Hasbro's partner in this, seems pretty confident.
They're continuing to innovate,
Oh yeah, new formats, new content, even Marvel stuff.
keeping it fresh.
Exactly. So is it enough to offset those declining downloads?
That's the million-dollar question.
It really is, and that's where Tycoon Club comes in.
Tycoon Club.
It's a new loyalty program designed to boost engagement and retention.
Smart, because it's cheaper to keep a player than to get a new one.
Exactly. So tell me, what do you think of this Tycoon Club? How does it work?
Well, it's a way for players to buy in-game stuff directly.
Directly from Scopely.
Yep, bypassing the app stores and all their fees.
So more money for Scopely and ultimately more for Hasbro.
Exactly, a win-win. The players get a more direct way to support the game. Hasbro gets a bigger piece of the pie.
It's a clever way to maximize revenue, you know?
Absolutely, and it seems like it's working.
It really does. It's fascinating to see how Hasbro is navigating this whole digital world, you know?
It's a new landscape for them.
They're not just relying on those traditional toy sales anymore.
They're building a presence in the digital space.
They're actively building it, and strategically.
I'm impressed, I really am.
Me too. Now, there's one more thing I want to touch on before we move on.
What's...
Their supply chain management.
Oh yeah, I was reading about that. Impressive improvements.
They've been very vocal about streamlining operations, optimizing their supply chain.
And it's paying off. Their inventory levels are the healthiest they've been in years. 7 years, I think.
It's a huge achievement, especially in this industry, where overstock and closeouts are a constant problem.
It's all connected to their decision to reduce those closeout volumes, right?
Exactly. Keeping supply tight, minimizing excess inventory, focusing on selling at full price.
Smart, very smart, especially in a market where consumer demand can be unpredictable.
So we're seeing a company that's not afraid to make tough choices, adapt, evolve.
Streamlining, optimizing, prioritizing profitability over just pure volume.
It's a positive sign, not just for Hasbro, but maybe for the entire toy industry.
They're setting an example, showing how to navigate this changing market and come out stronger.
It's exciting to see, really.
Yeah.
All right, Talk Tickers listeners, welcome back. We're still deep in Hasbro's Q3 2024 earnings call.
Still plenty to unpack.
Oh yeah, we were talking about their supply chain improvements, how that's boosting profitability.
Right. But you gotta talk about cost-saving measures too, company-wide.
Yeah, they've been strategic about it, haven't they?
Oh, absolutely. Cutting expenses, but without sacrificing quality.
Or innovation, yeah.
It's a delicate balance.
It is. And they've set a pretty big goal, haven't they? Something like $750 million in cost savings by 2025.
That's the target, and they're on track based on this quarter.
Already achieved $240 million in gross savings.
Through the first 9 months of 2024, that translates to $177 million net savings.
Wow, that's serious money. Where's it all coming from?
Multiple avenues. They're streamlining, organizational structure.
Like combining those global brand and commercial teams?
Within consumer products, yep, that's a big one for efficiency.
And optimizing manufacturing, distribution, right?
Squeezing better deals from suppliers, looking at every single step.
Working smarter, not harder.
Exactly. And it's not just about cutting, it's about reinvesting those savings.
Back into growth areas. Digital, new products, got to keep moving forward.
Trimming the fat, building muscle, like you said.
Exactly. So what's the outlook for the rest of the year? Everyone wants to know about the holidays.
Right. Well, Hasbro's cautiously optimistic despite the overall toy industry challenges.
Makes sense. Wizards of the Coast is going to keep performing.
Yeah. Magic and D&D, those are unstoppable at this point.
Dedicated fan base, constant innovation. It's a recipe for success.
And they're expecting a strong finish for Monopoly Go.
Scopely's still pumping resources into it.
Tycoon Club will play a big role there, keeping players engaged.
So even with downloads dipping, the overall strategy seems solid.
It does. They're not panicking about short-term stuff. They're in it for the long haul.
Sustainable business, profitability over the long term, that's good for investors.
It is. It's refreshing to see, not just chasing trends.
Deliberate, thoughtful, positioned for success.
Now, I want to touch on something they emphasized. Profitability over volume.
That was a key theme, sign of a mature company. Discipline, not just chasing market share at all costs.
Focus on high-margin products, even if it means selling less overall.
It's a shift, isn't it? From that growth at all costs mentality.
To something more sustainable, value-driven.
We're seeing it everywhere, not just toys.
It's the times. Gotta be strategic with resources.
And Hasbro gets that. They're choosing where to invest carefully.
They understand. That old model of flooding the market, it's not viable anymore.
Got to be more focused, more attuned to what consumers actually want.
Not just selling toys anymore, they're selling experiences.
and people will pay for experiences if they deliver.
And that's where Hasbro's brand, their history, comes into play.
They know what makes a good toy a good game.
They're using that to build experiences that resonate, both physical and digital.
And speaking of digital, we've touched on it, but it's a huge shift for them.
Not just dipping their toes, they're jumping in.
They know play is changing. It's not just physical anymore.
The digital realm is expanding, and they're embracing it smartly.
They're not trying to be a tech company overnight. They're integrating it. Creating that blend of physical and digital, it enhances the experience.
That's what separates them. They're not abandoning their roots, they're building on them.
Evolving, right? For this new generation, where the lines are blurred between physical and digital.
And they're not afraid to experiment, to push the boundaries.
But this isn't like your grandma's Hasbro anymore.
They're innovating constantly, new products, partnerships, digital initiatives.
And they're listening, engaging with their fans, building a community.
A company in tune with its audience, it's impressive.
It really is. I think it'll serve them well. They're showing the toy industry is alive.
Dynamic, full of potential, and they're leading the charge.
It's exciting to see a company over a century old, not just surviving, but thriving.
Testament to the power of play, the human imagination.
It's essential. It connects us, inspires us, makes us smile.
And Hasbro's delivering that message loud and clear.
Now, before we wrap up, one final thought.
Yeah.
Hasbro's not alone in this transformation.
Yeah. It's part of a bigger trend across entertainment.
This convergence of content and experiences, the lines are blurring.
Toys, games, movies, shows, digital platforms, it's all blending together.
And Hasbro's in a prime position to capitalize on it.
They've got the brands, the characters, ripe for cross-platform storytelling.
Not just selling toys, they're selling entry points into these universes.
Magic, D&D, Transformers, these are more than just toys, they're worlds.
Rich histories, compelling characters, endless possibilities.
And Hasbro's building this interconnected ecosystem. Engage with the brand however you want.
Buy the toy, play the game, watch the show. It's all connected.
It's powerful. It'll resonate with everyone. It's tapping into that desire for play.
Connection, escape, and Hasbro's channeling it beautifully.
So, as we wrap up this part, think about this. What else might Hasbro do? What partnerships? What innovations?
They've already shown they're not afraid to think outside the box. The possibilities are endless.
What do you think, listeners?
Welcome back, Talk Tickers listeners. Final part now of our Hasbro Deep Dive, their Q3 2024 earnings call.
We covered a lot, didn't we?
We did. Financials, strategy shifts, that digital push.
Yeah.
Even Play-Doh making a comeback.
Play-Doh, who knew?
Right. But let's bring it all home. What does this all mean for you, the listener?
It means Hasbro's changing, really transforming, and those changes, they're working.
Yeah, their toy business is turning around. They're not just reacting. They're shaping the future.
Proactive, that's the word.
Exactly. So anyone interested in Hasbro as an investment or just, fascinated by toys?
This is important stuff.
It is. They're not standing still. They're streamlining, embracing digital, focusing on those high-margin areas.
Games, licensing, that's where the money is.
And what I find really interesting is that balance they've got.
Between the old and the new.
Yeah, they're leveraging those powerhouses, Magic, D&D, Monopoly, but also fostering new IP.
Like they're saying, we know what works, but we're not afraid to try something new.
That's a good place to be, especially in such a, unpredictable industry.
Makes you wonder, what'll they do next? What partnerships? What innovations?
We saw the Scopely deal with Monopoly Go.
Yeah.
They even dipped their toes in NFTs with Magic.
Who knows what's next, right?
That's what's exciting. They're willing to experiment, push boundaries.
Not just following trends, they're setting them.
A company to watch, definitely.
Whether you're an investor or just curious about how we'll play in the future.
So for our listeners, here's something to think about.
How will all these Hasbro moves impact the whole toy industry?
Will others follow their lead, go all in on digital, or stick to the old ways?
It's a question only time will answer.
But one thing's for sure, Hasbro's making waves.
Ripples throughout the industry, you can bet on that.
This is a big moment for Hasbro, for toys in general.
Gonna be fascinating to see how it all unfolds.
All right, that's it for our Hasbro Deep Dive, their Q3 2024 earnings call.
Hope you enjoyed it.
We hope you found it insightful, maybe even a little inspiring.
The world keeps changing.
But there's always room for innovation, for creativity, for the joy of play.
Stay curious out there.
Stay engaged. And as always, thanks for listening to Talk Tickers.